I'm curious your take on the different ways that you can own gold and some of the risks of potentially like keeping it in a vault or keeping it in an ETF or something like that. Whether that goes into a safety deposit box, there's like vault companies. Maybe I keep it at my house, or maybe I leverage it through an ETF or something like that. What do you think about the different ways I can own it, and what are some of the risks that are involved with that?
Well, you can take delivery, and it's very easy to buy gold and have it shipped securely to you at an office, a P.O. box, or your house. One of the risks of keeping too much at house, even in a fireproof safe, is if people know about it, they can rob you. I've worked with law enforcement in the area. I'm on the board of Crime Stoppers of Southeast Texas. And, if you have a safe and keep valuables at your home, don't put it in the master bedroom or bathroom. That's where thieves go first. You want to put it in another room, preferably where it's not obvious.
Not in the sock drawer?
No, not in the sock drawer or in the mattress like Menendez, but allegedly. But what you want to do is have some at home somewhere in a safe, secured place in case of like when we had hurricanes here and we had to evacuate for 3 weeks after Rita or Ike. It provided easy liquidity when I couldn't get money out of Chase Bank for a week and then only $500 a day for weeks. And so it provided a way to get cash by selling off some of the gold to coin dealers that I knew outside of Southeast Texas. I would say that I would keep the majority in a private security center box, safety deposit box, or a bank safety deposit box. I've never had clients lose it from those places, although there was an instance in California where a bad guy had a depository center and they took all the boxes and people are having to go after the FBI to try to get their valuables back. And the FBI supposedly doesn't have all the listing. So that is a case that has happened in the last couple of years. It got a lot of notoriety. But for my clients and for me over 40 plus years of doing this, I would say have it in the majority in a safety deposit box. Your broker can work with you on ETFs. It's a very good way to own gold. Gold is kept behind the ETFs. Is if the ETF has an ounce of gold on paper, they have to have an ounce in storage of gold. And this year, ETF purchases and outflows have been greater than inflows. Now, central bank buying is up, and it hit 55-year highs last year, led by China, Turkey, Poland, and Russia. And so people, oftentimes they wonder about gold and the demand they think in this country or North America. But globally, right now, India, China, Russia, and other countries, the central banks are greatly increasing to back up their currencies gold. And they've been doing that since 2010. So that's a demand factor. Physical purchases are up from the U.S. Mint, from other mints of gold. But on the other side, the speculators, the brokers on Wall Street, they have been selling off gold for various reasons in ETFs. So that's where some gold has come back into the market. Gold's up about 3% this year. At one time, it was up about 9%, and it's gone back and forth. The dollar's strengthened now, more because it's all the world's currencies are being inflated and are fiat to some degree, a word that you used in previous conversations. And so it's kind of like we're the best of the worst. There's a race to the bottom, we might say. So right now, the dollar is a little stronger. People are looking at the raised interest rates and saying, hey, we think the dollar's a little stronger around the world, which generally decreases gold in dollar times. Now, dollar value. Since 2000, gold was $250. It's now $1866. Gold has outperformed all other major investments you think of, which is one reason in a Gallup poll, gold is the number 2 area that people say they're going to invest in. It's moved up from number 4 3 years ago, with only real estate is number 1. But it's gone above stocks and bonds and other things that people want to own gold, and we're seeing much more demand.
Yeah, so much to dig into on that. Let me unpack that a little bit, but I want to go back quite a ways because we talked about different ways to own gold, and I just want to say for everybody listening, this isn't really a one-size-fits-all answer. And so if you have one gold coin or one little gold bar, you don't have to worry about it as much. The more that you have, the more you have to worry about it.
Right.
So if you have, a gram of gold, I mean, maybe you do stick it in your kid's sock drawer, or maybe get a little safe for your closet. If you have more gold, then you want a better safe. Now, that also depends on where you live. If you live in an apartment in a very dangerous neighborhood, maybe you don't want to keep any there at all, versus if you live in a big guarded neighborhood, then maybe you keep more there. So you need to understand that it's a little bit different for everybody. If you have lots of gold, I think keeping it in some of these vaults like that you recommended, Mike, is a good idea. Specifically, if you have a lot of gold, potentially holding it in vaults around the world even. And so that's what I've done, putting kind of some gold around other parts of the world. So just in case, that's what sort of I keep gold for, like this, just in case, maybe I need to access it from somewhere else. And so you have those as options. So you kind of think through that. On the ETF side, though, I would also warn people that a lot of ETFs don't actually have the gold. So not every one buys one-to-one like you've suggested. And so unfortunately, it's hard to know exactly, but there's estimates that show that there's about maybe as many as 500 paper ounces for every 1 physical ounce. And so at the end of the day, if, the proverbial stuff hits the fan, so to speak, you could find yourself ended up, you have some paper, a paper claim to gold that you don't have any gold for. Have you heard any estimates about how many potential paper claims there are?
I haven't, but because you brought that up, I'm going to research that, because some of the ETFs I looked into did do one-to-one. But if they aren't, I would avoid those. I would want a 1-to-1 ratio in the ETFs I would invest in. I also wanted to mention, when you said holding gold, there are a lot of counterfeits from China. China's not just sending over purses and Rolexes and all sorts of jewelry and fentanyl components and trafficking humans and all the other things. They're sending over lots of counterfeit goods, airline parts, medical parts, cosmetics, filled with lead that are toxic, and coins, precious metals, and bars, tungsten bars layered with gold on the top that I got interviewed on NBC on. You've got to buy, when you buy gold or precious metals, you have to know the dealer very well. Is he a member of respected organizations in the coin and precious metals field? Better yet, has he won awards or served on their boards? Because just buying gold because of a radio ad or me, you've got to check out the dealer by seeing do they have too much to lose to treat you improperly. And there are a lot of counterfeits coming in from China. Facebook ads are some of the worst things. Amazon and eBay, we've seen lots of counterfeits, and they respond well when our industry tells them there's a counterfeit listed on their platforms, but they can't keep up with all of them. Alibaba is littered with counterfeits for a platform. And Wish is horrible for counterfeits being on their platform. So you've got to be very careful when you buy precious metals. They even counterfeit the outside containers and holders of official government containers on pant bars or on U.S. coins. So you have to have someone that you buy from. Check them out before you ever buy. Great investment, but you have to do that.
Definitely.